If you've been investing or trading in markets over the last decade, you may be aware of the January effect. But what you're probably not sure on is what tends to happen in this options expiration week. Yes, it's shorter and it looks like we're in for a lot of volatility, as the stats might surprise you that we're sharing today. Some other things that are going on. What happens if the market breaks out to a new high? How much higher could it go, and could it trigger a squeeze effect? Conversely, are we in some type of Wyckoff movement? Today we'll break down the S&P 500 in a lot of detail and really gain a bit of an understanding to what's happening here with the volatility of the VIX. Yes, a secret spike out that not too many people are talking about. What does it mean leading forward? And the last one is, of course, the crypto effect. We saw a buy the rumor, sell the fact. Are we about to get the same thing in a few sectors in the markets? Well, welcome back, everybody, to The Daily Show, where we talk about markets around the world. My name is Tom, and if you love markets like we do, then remember to subscribe and smash that like button. We cover stocks, commodities, and cryptos every day of the week. Let's talk about what happened, though, when it comes to markets last week. Nvidia was the standout. Huge rallies across the Magnificent Seven, but in particular, Nvidia breaking out, potentially going towards $600. We also saw Tesla weaken heavily, and at the same time, dark pool activity coming through on both semiconductors under the hood and big banks. And as we know, earnings season has kicked off, so there's a lot to discuss later on, specifically a couple of big banks that you need to be watching for the price action. It could be the canary that takes the markets down, or of course, it could go up if we break through the key levels. Let's talk fear and greed index straight away. Extreme greed back into greed just basically means that markets have started to slow down. We can often see what we call pullbacks in time, which is where we get a market that actually goes sideways for a while. And that is a very valid thing that could occur in 2024 during January, but we do expect it to be more volatile based on that VVIX spike back up. Just a quick reminder as well, we've got a VIP free weekly newsletter releasing this week, our first one of 2024. So make sure to subscribe. Links in the description down below. It's completely free to do so. Let's bring up a chart that's a bit of an oldie but a goodie. We've presented this a couple of different ways throughout 2023. And what it shows you is that generally speaking, you really should be mostly terrified about the first rate cut than you should be about the anticipation. Often it is a buy the rumor and then a sell the fact. Now, this is something that we've seen several times. Does Bitcoin remind anybody? Buy into, of course, the whole idea of the ETF and then sell the fact. That's exactly how it played out, and something we talked about on this channel last week. But US 10-year returns is also something I want to focus on here. If you've been following for a while, you would know that Bill Ackman obviously purchased a ton. We actually shorted treasuries heavily last year and then started purchasing massively around October. And this is the stat why. In pretty much all occurrences, we tended to see treasuries drive higher when we got the idea that there was a pivot on the cards from the central bankers out there in the world. So, of course, in all scenarios, we tended to see treasuries usually drive a bit up, and we saw things like markets start to struggle as the real reason why the central bankers were actually cutting comes to light. Remember, they do not cut out of the goodness of their heart. They generally cut because they're seeing a significant slowdown. So when it happens, we need to be watching. And of course, you will also want to be looking at a barometer we'll talk about later on today that's very, very important for watching for recessions and when things could get a little bit nasty in markets. So let's talk about this week. It's a shorter week, and we also have, therefore, some stats that come in to do with options. And of course, it is the general big options expiration occurring this month. Now, why is it important? Well, it's only up 38% of the time, and on average, it actually returns negative 0.32%. Now, that's if we go from 98 to 2023. If we take some other stats here and we take a look at January options expiration weeks, which can sometimes lie a little bit differently, then we end up getting some interesting stats as well that often show that the week is negative. In fact, options expiration week ends up only being up 9 times out of these reads and 16 times down, with an interesting read the next week after as well, which often can be a little bit more up. So if things are going to turn negative, could this be the week that it happens? Well, it certainly could be. And of course, we'll need our triggers on price action based trading a little bit later on. So let's talk about the January indicator as well, the trifecta. Will we get it in 24? So what the January indicator is, it's often a negative Santa Claus rally, which happens after Christmas into the new year, first couple of trade days, the first 5 trade days of the year negative, and then January being negative itself. There's also the toy 2-month, which we'll talk about later on, which will give us a great read for investment grade in the markets. But this tends to lead into weaker February results. So February will also be on the watch as being negative should we end up January being a pretty bad month. And a lot of this could come down to earnings. We've already talked about it several times, how earnings become so important, especially when this has been one of the things that's been driving the market higher in 23. Now, you can see here that Deutsche actually thinks that the forecast is looking good for the markets, but the Q4 consensus is actually a little bit negative. So if banks and other markets start to report okay, it could be quite good. But if, of course, they report underneath expectations, it's going to be very, very negative for the markets. And do remember that financials and healthcare have both gone plus up something around 26% since the October lows. So they've been some of the biggest gainers, and they really need to present good earnings. And the reason is quite simple. It's fairly easy for algorithms, for the AI, for effectively fundamental traders out there to be able to figure out what these particular institutions should be earning. So to have a 26% return, you better be making sure you're actually backing it up with some numbers. Presidential election years, how do they tend to look? Here's an interesting one that could be a precursor to the election. Will we get a new or, of course, incumbent president? Often it comes down to a lot of the returns. Bonds and stocks often return different levels depending on what ends up being the outcome in the markets. We also know that this is another way of looking at S&P 500 index seasonality, which tends to have like a double dipping effect. Often January starts to struggle around the middle of the month, goes down, finds a little bit of a bull in Feb, drops off, goes into March, and then we see a fairly strong rest of the year. There are some different ways to manipulate this data, so we'll be taking a look at it a few different ways, but you can see here is another opportunity when it comes to 20% years previously. So again, do we tend to see weakness here? Yes. When we take into account a really strong previous year, it's always usually the first quarter that struggles, with the rest of the year being okay up until pre-election. And then, of course, after election is usually where you get those big gains. So after the election could be a spot to watch. Let's now talk about expirations and options, because, of course, this week's going to be a big one. And I want to bring this up because it all comes down to a big strike point. 4,800 is going to be super important, and 4,850. It now looks like if we get through 4,800 and we close dailies and get through that level, we could be looking at a squeeze that goes all the way up to 4,950. Markets went negative gamma, then went back into positive gamma, and this 4,800 level is a huge zone. So because we have what we call a double long leg doji or indecision at the peak, we know that the decision of where the market breaks to next is going to be very, very significant. So from the options world, it does look like markets could be driving a little bit higher. But what happens if we go negative? What happens if markets actually break to the downside? So, of course, we talked about 4,700 being the big critical zone. It remains the same this week. And 4,700 is going to be exactly where, if the market manages to get through that zone, we're basically triggering into, I believe, somewhere around 4,550 to 4,600. Now, 4,600 is the logical next option zone. There's a lot of puts there, but around the 4,550 to 4,600 also brings us back to what we discussed last time, which is mean reversion. So we have two different breakout strategies. We have to remain flexible in the ability to see which one could be playing out. But do remember, this is a critical point in markets with significant options on the line, depending on where we break out to. Now we bring up CTAs. So, of course, CTA flow being, talked about a lot throughout the internet right now. And what we saw is a drop off of CTA inflows through the back end of 2023, and then they came in big time into the start. Now, you probably say that's some type of tax stuff going on, some profit taking, and then getting back in for the new year. But interesting point here. And yes, CTA flows are almost off the charts. So in a lot of charting software that is coming out here from Goldman Sachs and a few others, they're going to have to realign it if we end up getting CTAs any more bullish positioned. So what about sentiment? What about us, the retail traders? Well, we're certainly not that cautious right now. It turns out the bears did not improve as much as we thought they might last week based on the selling, and it's still very, very bullish. So euphoria, so greed, all of those types of things, certainly in this market right now. Shipping costs, something to be watching this year. We won't go over that too much, but I do want to go into crude bullish bets because it turns out that there are a lot of bulls coming in from the options market here on crude. Could they push it through? Well, of course, price action and the key level we discussed last week still needs to break out. But have a look at this. Look at the bullish bets coming back into crude big time here through the back end of December into January. Now, we've seen some stabilization in it. And of course, we already talked about this one, which was a Goldman Sachs model that said sideways to up was in most of their scenarios. We will look for the price action to come through, but this is very, very interesting. And of course, we also have call buying, which you can see here on USO, is striking off much, much higher. So it's starting to say, well, if we break out, it could be a squeeze event on oil, and it could be one of those big momentum plays that we haven't seen in some time when it comes to oil. It's obviously been selling for a long time. We were negative on it. We found this 67 to 68 zone, and we already know that the put walls sitting on these bottoms are quite strong. So if the markets are able to break out, expect potential squeezes here on energy should we be able to get through. What about the bulls and the bears when we go January effect in general? I'm just bringing these stats up just quickly. Of course, Santa Claus first 5 days usually means that January only ends up positive 27% of the time, which is pretty bad. And Q1 is a bit of a coin flip. Here's the first 5 trade day stat, which is only 34%. And here's another way of looking at it when we have a plus minus very small amount. So of course, this year we weren't negative huge off those first 5 trading days, but we also weren't very positive. So you can see even in those circumstances, really it's about a coin flip for the first month to slightly down. So in all stats that you look at, generally January is looking kind of negative. And then when we're talking about which month is going to be the best predictor for the rest of the year, it's all about April. So of course, we'll bring April up when it occurs. Now, it's earnings season. We already know that earnings growth was a huge component of the last couple of years. From 2020 to 2023, earnings growth was a huge reason why markets actually went up. And they've got to back it up again. Goldman Sachs is the bank we need to be looking at. We already know there's a lot of transactions going through there, including some dark pool transactions. But this is the bank that we need to be watching. So we're going to be looking at the chart a little bit later on, and that's the one that's key. Here are the expected moves based on the options market, so something very interesting there. And of course, we already brought this chart up a little while ago, but dumb money hit into some premiums back at the end of 2023, which usually means that we get 3 months of pullback or sideways action. Now, it's another stat or indication that markets are either going to do a pullback in time, which is sideways, or they're going to have a little bit more of a significant pullback, possibly to mean reversion. So I discussed before that we're getting transactions in the back of semiconductors. While Nvidia is flying high, the rest of the semi started to weaken off. And actually things such as stocks here have done what I would usually claim as a change of trend towards the negative side. So it does look like some semiconductors are starting to weaken off. 2 massive transactions coming in late last week, which are showing that we could literally see a sell-off on things like stocks back down into these levels, somewhere around $520 for the exchange traded fund. We're also seeing some large trades coming through on banks. JP Morgan placing a huge trade near the end of the day. Someone was in that one. Will they get further sells? It was a rally into a dump when we talk about the earnings result. But as we know, it's also about Goldman Sachs. So we'll look at that in a second here. What about the Russell 2000? Well, the Russell 2000 put in a big trade as well. Now, funnily enough, it put in this huge trade and it ended up as the day as a shooting star. So if we take the low out, mean reversion realistically could be on the cards. And we'll watch that one later when we get into the Russell analysis. We also have Mara, just something I wanted to bring up. Pretty bad investment. A lot of people super bullish on this a few weeks ago. And as we always talk about, these particular funds were nowhere near the quality of an exchange traded fund, such as these new Bitcoin ones. And it's really struggling. And so are most of them under the hood. They went into full capitulation and started to sell off. Big transactions, though, coming in at the highs. So why I put it there is just to show you that sometimes when you see these big transactions, then you get positive or negative volume or trade action, it does tend to lead into some relatively large moves. So I brought back this Goldman Sachs chart just to show you that there's been quite a lot of trading here at the peak as Goldman Sachs either accumulates or distributes. Now, if it takes out some of the lows, it could be a catalyst that the rest of the market is starting to dip, and the double tops could be in play across the S&P 500 and possibly even NASDAQ. Let's now take a look at the options world and have a look at the wild and wonderful in terms of major moves. And you can see here that we had a $43 million option day trade, which was big. And we had 53% calls and 47% puts. And then us, the retail traders, made up 28% of the single legs. When we take a look through, you can see Mara was very negative with actually even calls and puts pretty much. And there were some big trades still going in on energy. Energy such as Exxon up 1.3% with 89,000 on the calls. So there's been quite a lot of calls coming through. Citigroup also getting 419,000 calls versus 154 on its earnings day. So some big trades there, and of course a couple of unusual things. When we look through rotation, was it really a day that was super big? Not really. It was regional banks down, things like financials down a little bit, energy up, and gold performing quite well, which was probably expected when we take a look at the price action. And then, of course, we also look at yields dropping off during that session. When we go over the last 5 days, it's still technology and semiconductors and all of those types of things up in front. And it's really been a movement of both defensives and some of the semis. But these semis have recovered very quickly. So it starts to make you think, well, is this market really showing us a true recovery, or is it more of like dead cat bounce in those particular sectors that were sold off near the back of 23? Let's now take a look at the S&P 500. We do have a supportive and accommodative world central bank, being the purple line. And of course, we also have one from the Federal Reserve. So the markets are being held up a little bit by that. The percentage of stocks above the 20 moving average have dropped quite significantly down to 37.56. So we're not quite at those 25 levels yet, but we will be watching this one very closely because, of course, if we get down to there, we get down to mean reversion, could be an interesting zone for swing traders and investors. And yields dropped off after making it through the 20 moving average, coming back down into this red zone we've got sitting around 3.9%. I'd like to see yields spike off this level if it's going to trigger a further sell in markets. So, of course, yields worth watching, and you can see here the weekly and how it's looked. It hasn't got back to that 4.2%, which would be mean reversion. So we're obviously looking for that potential should we make a hold here at 3.9%. Let's move over to treasuries. Big transactions going through around here in treasuries, and also a new low being formed last week. If we get through this yellow zone being 97.66, I could see pushing of pressure to the upside. So obviously some strength could come through treasuries. But for now, the trend is down and markets are continuing to basically sell off treasuries because they had such an amazing return. I mean, to see a return like this in treasuries without a pullback, pretty unusual. And at this point, it's just doing mean reversion, which is moving back down towards that 20 moving average and that 93 structural zone, 93, 94. When we look at bonds and we take a look at the risk levels there, not too much movement. So bonds basically showing that they're not totally fearful of the markets right now. Transportation's certainly still weakening off. Big transaction volume coming through on transportations. And at the moment, that double top is playing out. So you can see here, weakness in transportations, an early sign often that things are not looking too good in the market, at least in the short term. Then we go over to home builders, something similar. Bit of a return here where markets kind of started to look a bit weak. And if we go and have a look at semiconductors as well, you'll notice that this is the one we're talking about. The big transactions went through here, and we have kind of like a little bit of a change. So Nvidia might be doing really well, but the rest of the semis not so good. And if it does manage to get through those kind of low lines here, and we'll get a bit of a price here, about 548 on SOX, you could really see semiconductors start to weaken and even move down into that previous flag level, which of course sat around 520. So there could be a little bit of selling here coming up for semis if markets are unable to hold what is currently being 2 rejection wicks. And of course, for bulls, what you're looking for is just a break out of this high, fill the gap, move to a new all-time high. Big transactions coming through. Are they sells or buys? We'll probably find out in the next couple of trade days. So So let's now take a look at the volatility of the VIX, and obviously we have a pretty big spike up here. A lot of this is due to this week's options expiration, but also because earnings season is kicking off. Now, it's an interesting factor because we don't always see it lead, but sometimes it can. Let's actually load up here the VIX over the top, and what you'll notice is that we sometimes see a bit of a spike. We'll change this to a line chart, and we sometimes see a bit of a spike of VIX, VVIX, before the VIX spikes itself. Volatility spikes here, the VIX actually spikes afterwards. So this is something that we're looking at, and of course we're very closely paying attention to. It's the VVIX, and volatility certainly looking like it could be on the horizon based on this chart alone. Let's move over to the US dollar, still holding through this zone, still no closure above 102.40, which we're looking for on the daily. If the closure does happen, we could see the markets move to 103 to 104 on the US dollar, and at this stage, the market is being kind of held down by this daily 20. You can see here it just keeps sitting around that level and the downward trend line. Now, if the US dollar is able to get up, oftentimes that's been synergized with markets going down. If the US dollar is closing below these lows, it's probably going towards a new low, probably underneath parity itself, which is 100. And markets will most likely be through that big 4,800 zone and pushing towards the 4,950. So remember, there are two scenarios here, but we can see how important these areas are. Gold did rally back into our supply, sold off that area. I could see it kind of selling down to the most traded zone, potentially some buyers finding themselves in this area. Day traders may want to be looking at those levels and seeing whether there's anything interesting. But at this stage, gold remains between 2,060 and 2,003. Let's move over to oil. Now, this was very interesting. It rallied hard coming into the session and then got crushed back down. So we already know there's going to be a ton of shorters here on oil. Oil's been pretty negative. It's gone bad for a while. It's obviously on the trend line, so this is a very important level. If oil is able to break through and go above this zone, I'd say it's squeezing towards the upside based on what we've seen with the options, based on everything else that's going through. So I think oil is well worth watching on the charts, and we'll be following it this week. Big level for it. Tesla, not so good. Bad looking day, bad looking candle. Generally speaking, what do we see? 210, possibly even 200. Really absolutely no buying structure here for it. It's just sellers and sellers and sellers. We already knew the previous accumulation zone was a big deal, which was 233, 232, and it just wasn't able to find the rallies that we were looking for. We already spoke about this zone. I liked it quite a lot, actually. And then it came down to this level and was unable to find any buyers. Now, if these trigger alerts had happened, we would have been on the bullish side, but of course didn't occur and it just fell through the bottom. Once that happened, it opens up 210. So at this stage, it could be that Tesla actually needs to sell even further to even get to the first level of buying pressure. What are your levels for Tesla? Let me know in the comments down below. Let's now move over to NVIDIA. So we talked a little bit negatively against semis because semis have some change of trends towards the downside, but NVIDIA has been very, very strong. Could it hit 600? The average expectation, according to the 12-month target of Wall Street's economists, is $660. So are they going to be able to get to 600? I mean, it's a classic style breakout pattern. The thing about NVIDIA is it often does fail with breakouts and then comes down and tricks people, but I would say at this stage, you have no reason to be really terrified of NVIDIA itself. It still looks like it's long. Like to see a new high put in the first couple of trade days. Then we move over to Goldman Sachs. So we mentioned there were a lot of trades here. Now, why is this an important level? Well, it's previous supply. It's been shorted before a few times. And we can see here that we're setting up for either a great breakout up or a pretty pitiful kind of sell-off. And it did have that huge rally that came through here. So if the market's able to get underneath these levels of around 374, then we could be moving towards really breaking down to around 340. Now, that would give us that mean reversion pullback that a lot of people are looking for on markets. So remember, financials kick us off in earnings season, and the rallies have been significant. Let's just take a look here at the rally of Goldman Sachs. So the rally of Goldman Sachs since the October lows was 34%. And it's the same thing through financials. So could this be a buy the rumor, sell the fact, the kind of storyline that we had with Bitcoin as well? Well, price action will tell us, and it's some interesting zones there coming up. Let's now move over to the German market. It's sideways, guys. Who knows? the trend is up, so you'd always go with the bullish side. But yeah, pretty messy market there. The Australian market, clearly the ASX is maybe possibly even accumulating here, but it's waiting. Until we get a breakout, we won't be on a momentum trade. So I could see people taking profit and targets at this level. So that's kind of key. US 2000 though, I want to talk about this one. So look, shooting star rejection, very nasty looking chart, comes back up to grab the liquidity, which sits around here. So you can see the liquidity sitting right in that zone. We see a large transaction come in. The last time, I was talking to the guy, the last time this happened, I believe it actually sold off when we saw a large transaction coming through with a very similar setup. Doesn't mean it's going to happen again. Of course, anything can happen in these markets, but we don't have the further sell through. But if we do, what happens if we get through these lows? What happens if we get through 1920? Well, the next logical zone for the market is to go mean reversion, 1860 kind of area. So between here and here could be quite a free flow of the markets down to that zone. And at this point, we'll be at the weekly 20 moving average. So of course, a key level, also demand, and that's going to lead into quite a few other markets starting to struggle. Let's now move over to the NASDAQ. You'll notice 2 long leg dojis just before. So last week we spoke about the idea that if in this zone we saw some type of weakness, that we would actually be triggering shorts. Yeah, if it happened, again, patience, react, don't predict. If it had happened, I would have had to go. I mean, that's how it is. Why not? It's a replicable concept, and that's what it's all about, creating replication in your strategy. Then we saw the market obviously go higher, and then it came down here in the NASDAQ, just making a low underneath this low, but not, of course, the main one over here, which we're looking for. Then it moved back up to here. This is an interesting zone. I could see sellers going for this on the NASDAQ and trying to protect themselves above this high. It's an interesting point. It's definitely the weakest market other than the Russell. It's weaker than the S&P overall. But yeah, it's a very interesting level. And of course, if we see ourselves finding back down to 16,600 and below, I could see that would be a catalyst for markets. Let's now move over to the US 500. So the US 500, we already know 4,700 is the biggest zone. But we also know 4,800 is the biggest zone on the bull side. We close above 4,800, we're probably starting to squeeze. It goes 4,800, 4,850, big important zone in general, but I would say 48 being the biggest one. I think it's like 48, 48.15 from the options side. And then 49.50 is going to be the next level actually based on current options of where the big triggers are. So we're at the high. Are we in some type of Wyckoff? We could be on a BC. We could be on a UT, therefore. This is a UTAD then. And then we see weakness that comes through here. If that happens, down to ideally 4,600, 45.68, and of course the previous demand block. So there's a lot going on here in the markets and a very pivotal point. And really, like anything, you need a good catalyst, and the catalyst is going to be earnings. And if you were playing the stats, you would say that, well, technically the market is weak on the stats because that's what usually happens this time of year. Now let's move to Bitcoin. Bitcoin sold, and we talked about the watch reaction here. Of course, we always had that target of 47 to 48K. Did it get higher? Yes, it went to 49. I understand. But it's sold off that level. Now, is it actually structurally super short? Yeah. So there are 2 scenarios. There's the day trader scenario where they're going to say absolutely it's short and markets are looking pretty weak. And they'll be looking for pullbacks to go short somewhere around that 46K mark. The longer term trader, though, is going to be looking at this and saying, well, it's not below 40K, so why do I care? And that's a fair assumption. If it gets underneath 40K and doesn't have an instant reaction, I would say that there's a good chance that we're moving well down. 36,000 or even 28 to 29 could be on the cards. And if you're getting a 28, 29 read with the Bitcoin ETF as it sits, the inflows, and of course, you might say that's impossible. I say anything's possible. But if you did get that and we were going into a halving cycle, what an interesting time indeed that would be for Bitcoin, and possibly a very important period for it, which could be pretty sweet. So we'll be watching this one quite a lot. At this stage, though, nothing to get too excited about. Still within and above the 40,000. So I could kind of see like a bit of a relief rally, and then, will 46K bring the bears? That's going to be the next area I could see them sitting at. Ethereum is also one to watch. Of course, this actually weakened off a little bit. Oftentimes you see movement from Bitcoin into Ethereum, and then it rotates and it outperforms. It's due it, but will it do it? I don't know. Price action wise, if I was just looking at this, I would say it's not looking too good because, of course, rallies. Well, actually, this would be a pretty good short zone where it was 2,600 if you're looking at day trading. But I'm going to say that Ethereum, generally speaking, I would usually say it should outperform Bitcoin, so it should perform better. And that's usually the kind of line that you would take. Price action wise, though, you're looking at that 26 to 26.50 being a struggle zone, as it is the most traded first level. If we breach through the high, I would say just under 3K is the target. Let's now move over to the major news this week. So as we mentioned, of course, we have Monday, bank holiday, no market. Then we move in and we get the Empire State Manufacturing Index, and we scroll through and we get core retail sales for the US. Could be quite important coming through that, 8:30 on Wednesday. And then we can scroll down here and you'll see there's a few bits of economic data. But really this week's the kickoff of earnings and really an allowable catalyst due to options to allow shorts to come in if they want to. If the market chooses it's going to squeeze everyone because of positioning, then 4,800 plus, I can see some fairly large market moves occurring. Anyway, either or, we're going to get some volatility. And do remember to sign up for our free VIP weekly newsletter in the links down below. I hope you enjoyed today's video. And if you did, remember to subscribe, smash that like button, guys, and have a great long weekend for everyone in the US. Otherwise, we're back at work. All right, let's get it done. See you, everybody. Bye for now.